Morning everyone. So today we'll be reviewing how I go about the market and just about um, the way I go to use, for example, Webull here. So I go ahead, I open it. By default, it takes you to watch lists. We're right on time with the market. It's about to open just about 50 seconds there. Just before that, I'd like to have a quick look where things are. Pre-market here, we can see that it is under here. There is a swing I did here. I'm gonna log in really quick with my finger there. So just yesterday I lost 219. I went in this position quite early. Today I'm hoping to see a recovery due to the fact that I went or that the stock went under the dollar of my target, which is 447. We can see here it is hitting 446. It's hitting under. Um, so we'll see what happens right now that it's about to open. I'm about to sell these two. Uh, so I'm back 437, 420. So I'm gonna close this position right here uh, at 200. Hopefully, I gotta do this slightly quick. To next. Need to hit that back. Hoping this fails. Uh, okay, so I am officially out of that position. Uh, so I made some of the loss that I had from yesterday. Let's see here. So it seems like today I won't be able to do much. I mean, technically I could, but then it won't be really good for this account. Um, I'm just relieved that I got some of the money back. I was potentially going to go under there. It's just too risky. The markets just seem like they want to move on the upside. If I had not gone early, that would have been potentially a really good move there. Uh, I'm going to watch carefully. There is a chance that uh, it may proceed to go a lot under due to the fact that it is under this particular line. This is the 200 EMA under the 3-minute time frame. And this tells me, for example, if we look back in time, the same line, whenever it went down, it kind of wanted to stay down beneath it, but then as soon as it crossed, it was a foreshadow of what was coming yesterday in this area here. And if we look even further back, we're able to see that whenever it goes under, it kind of stays under. So it foreshadowed here, in this area here. Uh, then it continued to go under and even further under the 200 EMA. So it's a really good indicator of whenever the markets are not really doing their best. As we can see here as well, it's a long line at times. So it may be that SPY here may go a lot more under, but it really depends here. It seems like it reached up here. That usually means, well, due to the fact that there is a gap here, there is a chance here that it may just pop further back up. But I just didn't want to take that risk. I wanted to secure, especially after I lost a considerable amount just yesterday. Uh, but let's have a look. Well, it's looking like it definitely would have been even a further recovery there. I'm going back to have a quick look at the same 448 puts I had. Going back here, 448. Those still would be the same pricing. If anything, I exited with a lot better gains there. So I have no real regrets here. Uh, it's, honestly, this would have been 4 or 220 return. Uh, of which I don't think, let's see, if I go back to my previous trades here, previous orders that failed and that failed today, this was at 208 average price, which means that my limit Or actually, the limit price, how much would that have been? Because I did go with my full account. Also, it did sell me at a really good price. A really, really good price there. I guess what this really means is that for each one it was 104, and right now it reached 110. So technically, yes, I could have held, but it was just too risky. This market really wanted upside. As you can see, it's just on a streak of going up. Uh, it was way too high up, especially in this golden line, which is a golden resistance for the stock, especially reaching 450 yesterday towards closing. That's just a sign of too much buying on SPY in a row. Uh, of course, stocks must take a breather when they reach these high levels. So, all things considered, this was the best move. It was to secure this position. If I wanted to re-enter, or yeah, I would have exited. Still in good time in this, so I'm still good about this. But if I wanted to, this could easily uh, be entered if I like, for example, hit here, and then I were to say, for example, uh, select the limit price. Of course, this is always changing. As you can see, 148 became 142. Fortunately, here on Webull, this adjustment is done for you, so you can buy in cheaper uh, if you edited it. So it still does you a favor, even though this is typed with 148. But another strategy you could do is set it lower on this limit price on Webull. That way, you proceed to uh, secure this position in if you're willing to. Otherwise, it's not really necessarily advised to go with the market order. Which, by the way, there is two ways to enter a position. It's either uh, with the default that was here, which was 148, or you can enter it manually, or just a limit order. That's why here it's indifferent of what strategy you can go with, either the one that was presented to you by default, or the one with where you can enter it yourself. Sometimes it even offers you these, which if you click it, it adjusts for you. You can use this mid or this bid or this ask right here for setting the price. Sometimes it's a lot quicker, but of course, like I said, you can go down under and buy it cheaper. And if it fails, it's good. If it doesn't, then um, the idea is that a lot of times the idea is to be able to get in a position, but uh, at the end of the day, that's entirely based on how much you have available to buy, which, by the way, you will have that presented to you down here at 423.79. So that's pretty much what we get off of this one. I'm trying to see if there's any other reference here that we can go with. Another thing about Webull here is that you have calls on the left. Also notice that in the beginning we started with chart tab. This is one of the things that you have to look out for to actually do options, is that if you were to do trade here, it's not anywhere near the same. Here you're actually buying shares. With options, of course, you're buying, uh, basically, I recognize them as bets, and that's exactly what you do. So you're placing a bet at a particular price. That's basically, you're saying that the stock is going to hit a particular price for a certain day. And for example, these particular setup, this particular chain of contracts that you can possibly buy, each which are priced right here on this left side here, on this mid. Uh, this basically would mean that this call here, this target, which is 290, which is very obvious that it's already in the money, because the stock is at what is that, 446.51, and over here, uh, if you place a call that is 290, it's obviously going to be expensive because it's already secured position, and so this would cost 15,646, which it's too safe of a play. You know that the stock is gonna close on this, so even if you didn't sell or bought it, you'll be so secured. But you could barely make any gains, honestly, with this type of cost. So it's really not worth going this far out or this far in if you're doing calls. And if you're doing puts, of course, it's gonna be cheap because you're saying that the stock is gonna hit 290 today. If you look back as far as 3 days ago, 5 days ago, you can clearly see that it's evident that it's not going to be possible to hit these strikes, which is why as you go down the chain closer to where the price actually is, which is 440 right here, this ITM here is indicative of in the money for calls, as in right now the stock is at 446, so of course it's in the money. And for puts, you're in the money if it's 447 because you're saying that the stock is gonna go down, or uh, that basically if the stock were to go down and you're looking at this direction, you're saying that the stock is gonna keep going down, so it's at 443, uh, and that's why it's relatively cheaper because it's uncertain whether it will actually reach to this low. And so you could say, for example, tap that 443, of course it's $63, and then as pi continues to go down, of course it will go down as well, or this pricing will go up because it's a put saying that the stock will go down. So if we were to buy it, not necessarily buy it actually, but if we click this limit price, we see that the mid is dropping on any upside for the stock, given that this is expiring today. Uh, Another thing about this option chains, pardon me there, you'll notice that this is selective of however you want to see, however many chains you want to see at once. Uh, you'll notice this 0 day, meaning that these contracts, all of these contracts will be expiring today. So uh, obviously you wouldn't want to risk it to this unless you really know what you're headed for. So in this case, you would actually look into something safer, something that would expire next week if you were to enter a position, especially on puts here. Um, Now, given that it is headed in the negative direction, at least for now, in this entry, it'll likely bounce at some point here, like we saw in the previous look here, or something like even the latest aspect here. We had an entry, then it kind of settled for a little bit on the upside, and then we had it back down here one more time before it highlighted the giant upside we see now. So with these puts, you always want to be looking out what day you're striking for, and the whole idea is the further out you go on these contracts, the safer you are, but the safer you are, the more expensive it is on these positions. And now instead of the 200 position costing 24,650, uh, out here, I guess it's not that much different since it's relatively same in safety, but it's not that it will go on that upside just yet, or continued upside just yet, especially after crossing this line. So not necessarily a good move in the first place because of the expense on that particular contract in the first place. So uh, aside from this, not really much else as far as how to navigate the Webull app. Like I said, today I will not be entering as it wasn't such a great day yesterday. If I go to my P&Ls here, I went from, let's see, from last week. Let's see, is there a way for me to see detail? Okay, here we are. So I believe I had hit 521 up here just yesterday. I was at 521, and then I dropped to 249 before SPY revived me back to where I am now. So I think that is a pretty decent recovery, all things accounted for. Uh, and I plan to hopefully come back with potential a potential move by tomorrow. That way I can recover this account and potentially even bump it further from what it should be. So we'll see how that turns out. I'm gonna have one last look here at SPY, where I would have been if I had sold a little sooner here, or a little bit later here. Let's say I had sold right now, I would have been 102. So relatively the same position where I am now. I think it peaked at the 1 to 10. Possibly went down a little bit more at this point in time, but it must have been really hard to even time this drop here, in this one, in this particular candle here, uh, right here. So there's still room. There would have still been room, but it was just going to be too risky, and I just didn't want to lose any further than it should be. But this is what it looks like, as far as navigating the Webull app, how to purchase, and how to place a position. This watch list doesn't, I don't believe it comes by default. This is one I made by myself here. And by the way, another thing about those option chains, for customizations and for your convenience, again, we would go to the options tab, and then it won't really appear like this by default. There is this adjustment button here at the bottom right where you would select it. In this, of course, you first want to adjust how many of these columns will appear. You honestly just need three. Sometimes I like to see just how much the ooh, that drop there. Let's have a quick look at where I would have been on this chain. Let's see, back to 440, 448. So I would have been. Oh, wait a second. This doesn't look right. Because that's a giant drop. Could it be 448? It is the 0 day, so I'm a little surprised it dropped so cheap. 79. Well, I definitely can't regret selling earlier for sure. Uh, wow. I just can't believe that it went so cheap so fast. I would have actually been at a giant loss then, if I had held, even though it dropped to these amounts. So I quite honestly sold with quite the profit to start the day. This is really good. So basically every upside damages the puts here, and that's what we're seeing, especially since it's in. Oh, I apologize. Actually, I've been looking at the wrong side. Actually, this would have been quite a recovery. I've been looking at calls this whole time. As you can see, the left side does point out to the calls, and then the right side here points out to the puts. I've been looking at the completely different side. In here, clearly, I would have made quite the profit right back up if I had only held just a little bit longer, but I have no regrets. Like I said, it's definitely secured money at this point. So going back to adjustments here under stable, you would select the bottom right icon there, and to columns you would hide a lot of these that it provides to you by default. When you do options, you honestly just need, if anything, the most crucial one is the mid, to have a rough idea where you want to buy in. Obviously, the mid tells you you could enter cheaper, maybe $5 cheaper. The bid and ask give you that rough idea as well, where you would be willing to go into a position. And the change percentage is honestly not necessary, but this is what it would look like. Uh, Once you adjust it, basically you would have just the three columns here, as the subheader here, and with the mid at the very front. By the way, you might want to do that when doing these columns. You can move them by holding this button here and moving it up or down in the positions. I personally leave it at the top. It's very useful. So you would hit save once again, and then it's all set here. Everything else, by the way, I guess you could select for list, and it would turn out into this list view. This all just looks too long when it should honestly be straightforward. Here it just makes you scroll a lot longer than you honestly should. So the straddle view is the most efficient because you just want to be able to look at the price in the center target, and then decide whether you think that the stock is going to go up or the stock is going to go down. And if it's going down, then obviously you want to be selecting the higher targets, or yes, in that case, yeah, the higher targets. So that's basically about it. Here, you wouldn't need to change to a single option. All of these are definitely not necessary strategies there. Uh, and of course, I guess I didn't know about this one. If you wanted to see it just one-sided, over here it offers you just a single option. I guess this looks cleaner, but I personally prefer to have both of them. Just handy. Um, it gives me a rough idea of which side is suffering, which side is getting more pain here. Um, so that's particularly why I keep that aspect there. Other than that, I'm trying to see what else may be of consideration here when buying a position, buying into a position that is. I don't think I have much else. Well, that's about it. So yeah, guys, we'll be back on I'll be back on another clip to hopefully cover ground on how to actually buy into a position, what scalping would look like. I guess scalping would have been, for example, if I had entered that same position that I sold earlier and held out to this point. Basically, it went from 446 and it dropped to this amount, and I would have profited the difference. So instead of the 104 that I sold for example, at 448, so that 104 would have become 249 for the two puts that I had. So that would have settled me at 500. Yeah, 500 because 2.5 is times 2 is 500. So yes, that's where it would have been. I basically would have recovered where I was at 521 the day before, basically, on my assets page, or yeah, my assets tab here. If I go to details, yeah, so it would have basically been up here if I had just held to this point when it first went down here, I believe. But yeah, that's all I would have, guys, and thank you for watching, and we'll see you next time.